The wall of worry, often discussed as one of the biggest traps for retail traders, has now started to happen once again. And with hotter than expected inflation numbers, how can we possibly be going up? In today's video, we talk about what exactly is happening in the options flows, the biggest dark pool activity, and why this green line has an incredibly high chance of being met sometime in 2025. We need to talk about yields, the well-timed news announcement off demand for Tesla, and of course, what exactly is going on in the crypto markets. Can we really see Bitcoin, Ethereum, and others start to improve? Today, we'll be discussing stocks, commodities, and cryptos. Join us for one that is not to be missed. Well, welcome back everybody to The Daily Show. My name's Tom, and in today's video, we'll be talking about the latest data, the big insider transactions that are going on right now in a particular sector, and of course, the options flow now that we're back in positive gamma on quite a few stocks. Yes, there's a lot going on, but let's begin by talking about one of the biggest stats that we've seen in a while, and that is coming from Jonathan Krinsky, CMT, to do with the stock market and the 200-day moving average. As it turns out, every time since the 1990s that we've gone a calendar year without testing this one, it has happened in the next year. And 3 of 5 of those times have now occurred in the Q1 period. So could we be coming up for a bit of a sell-off even though markets are rallying at this stage? Well, as always, timing will be everything, and we'll talk about that more in today's video. Now, why could it be that we may hit a 200-day moving average sometime this year? A lot of it has to do with how year 3s of bull markets tend to be. Year 1, amazingly good. Year 2, phenomenal. Of course, we just saw 2 back-to-back absolutely phenomenal double-digit years. Then on top of that, we have year 3, something that tends to be more of an up-down and all-around style market. And yes, it ekes out usually gains, but they are not the same. And this means that for traders, investors, and for anyone really just looking at markets, it's all going to be about rotation. Speaking of rotation, we mentioned the other day that hedge funds had been selling off and net sellers of the market for the last 5 straight weeks. Well, as it turns out, they started purchasing once again into these reports, particularly the CPI and the PPI reports. And that has helped, of course, the market find some gains in recent times. It looks like some of the biggest traders in the world are actually buying, and they're doing so into what is actually usually a seasonal weakness. Now, everyone's probably seen these charts by now, but traditionally, especially in a first-year presidential cycle, you tend to see up for half of February and down for the other half. That's at least the general rule. Now, of course, this is just a seasonal effect and the data is there, but that doesn't mean that price action, which is the number one input we look for on this channel, is going to agree with that. And of course, with the break of the last 24 hours, if we close weekly levels at these zones, this could mean that we've got a lot more to come first before we actually see a sell-off. 6,200 sound familiar? It's something we've been talking about quite a few times on this channel. Now, what could be some good investments for this year? Where are potentially some of the better data and statistical facts? Well, one of those actually comes back to Amazon. It turns out that when Amazon has a pretty good January, since 2015, it's tended to be better over the rest of the year. And you can see here that the 100% of the time, the market was actually positive in terms of Amazon for that rest of the calendar year. Does that mean go out and buy tons of it? Well, of course not, but it's an interesting statistic nonetheless. And it kind of points towards, again, even if it was just 0.5%, some positivity potentially being there for one of the most important stocks in the world. Let's, though, talk about these inflation figures. We've seen the core CPI and the CPI, and they were, relatively speaking, hot. And of course, the market said, you know what, doesn't matter. We'll push up yields. We don't really care. And we'll still keep going up. Well, now we've seen the PPI. And there are a couple of different arguments for this one. As you can see here, the consensus range and the realities were very, very different. But the one that most people seem to be focusing on is the excluding food and energy one, with some inputs here. And the general expectation is that the Federal Reserve uses, of course, the core PCE, which is made up of these two things, PPI and CPI, as their main read, and kind of they figure out whether they believe inflation is going badly or good. Now, in this one, it could look a bit better. And the argument, I guess, is that basically if you take into consideration the financial and healthcare services, which were a little bit soft in January, again, some things were actually hot, some things were soft, then in general, if you kind of fumble the figures, you can get to a number that looks kind of good with a 0.27% core PCE increase. Now, I don't really care about this number. Let's be real. It's all just bogus stuff. The big thing to focus on here is the fact that I believe it was all about those tariffs. And we didn't see retaliation tariffs. And basically the market said, oh, that's pretty cool. Maybe we're not going to get as many high-end tariffs as we thought. And the market uses that as an excuse. Remember, just follow the price action. Follow what you're seeing, not what you're hearing. What you're hearing is generally going to be a mistake from the news. Speaking of what we're seeing, take a look at corporate insiders. It looks like healthcare companies, maybe they're seeing something that we've already been talking about, but it's now coming into the statistics. And that is that corporate insiders are buying big time. Yes, corporate insiders are absolutely ripping into healthcare stocks. And when we've seen this before, well, you can see the results. Yeah, sometimes not fantastic, but generally speaking, some nice results that could keep up in line with, of course, the most important thing, which is beating or pretty much averaging the S&P 500. Now, 100% of the time, we've seen the next 2 months, 3 months, 6 months, and 1 year later be positive in these situations. And this stacks on to what we've already discussed here on the channel for at least the last month and a half, and particularly in our private community, links in the description down below, about all of this. Healthcare could be the one that goes a little bit hotter this year, and that's against, again, the news narratives. Now, speaking of news narratives, of course, Chinese stocks have been ripping, which we've been focusing on a little bit in recent times. In fact, we've been doing this for about a year. And it looks like you've got kind of a few different stocks. You've got the ones that are the heavy hitters in growth that are doing really well. And then you've got some upticks here in Tencent, Baba, NetEase, and even Baidu. So a lot of stocks in China still cheap by multiples. If you want to have a look at them, we're still seeing a bit of a rip, although that did pull back over the last 24 hours that we'll look at. Fear and greed index, as we know in crypto, fear has taken its hold, and that has led on to a couple of very large transactions coming in. Again, do what they're actually doing, not what they're saying. And we saw some big dark pool liquidity, in particular on the Bitcoin 2 times levered funds. Now, this is important because, of course, if we now see price action push in the direction up, then it tells you they've set buys and they're probably going to start loading on those. Latest data to come in, this is from the 12th of February. In terms of Bitcoin ETF flows, you can see net negatives on both Ethereum and Bitcoin, although the 7-day looks like it's negative. You remember, it was very positive for Ethereum with that crash that happened last week. And just remember, that crash was the largest ever recorded in terms of 1-day wipeouts for retail. So, of course, it does have a decent chance of being the low. Now, let's talk about S&P 500. What a day. PPI comes in, most people think it's hotter, kind of is, and then everybody probably turns bearish. Well, not the market, it actually ripped everybody, and this is the wall of worry. In essence, for the markets to go up, there has to be bulls and bears, and generally the bears, if of course it's going up, have to be getting ripped. Now, in this case, I hope it's not one of you guys, but generally speaking, that is a fairly strong close, and it happens above the core wall that we've been talking about, 6,100. So does this mean we're going to an all-time high? Of course, it seems very likely. And you can see here in the futures, some of the things that have tipped us off to this recently have been these wicks that we've been very strong with. And to close like this would be significant. Obviously, weekly close will happen in 1 day's session, and we'll find out what happens there. But I wanted to just alert you guys to another thing, and that comes back to that 200-day moving average. So let's jump on over to this chart here. And you'll notice the 200-day moving average currently sits at around 5,700. Now, remember that stat. We haven't touched the 200-day moving average in a very long time in the real market. Now, you might say, but Tom, look at this touch over here. Well, that stat comes from, of course, the S&P from the perspective of SPX. So if we were to load SPX here, and we were to look at the chart, you will see there's no 200-day moving average. So before you ask, that's what it's actually looking at. Now, it's been a while since we've touched the 200-day moving average, and that could mean that it's going to happen in 2025. And of course, we've talked about for a while now that we believe there'll be at least a 10% sell-off at some point this year, at least statistically. And a lot of you guys are like, Tom, it's going to be like 50%. It's possible, again, if we get lead indications, well, I don't think 50% in 1 year, but you know what I'm saying? It could be a deeper pullback. Now, it all comes back to knowing what you're looking for. And of course, we do have many reads that currently are not being incredibly bearish. They're being cautionary compared to where we were in 2024 and 23, but they're certainly not very bearish yet. So with the breakout like this, we have to look instead to the options market. And you guessed it, it's positive gamma all day. And if these markets remain bullish, they're going to feed upon themselves. Look at the stack of calls that are coming through for both the 14th, the 18th, the 21st. All of this is pushing towards that 6,200 number. And it seems like that's the most logical course here for the markets. And of course, when you think about it, it's coming in across all of these markets, including the big tech stocks. So you've got things like Tesla, which what a well-timed announcement. Hey, we get the SpaceX announcement followed by armored vehicles or something, government contracts floating everywhere, perfect demand level to be hit. And then boom, it's just, it's a bit of a joke, yeah. Anyway, what happened was, of course, we hit the 320 in the morning and we saw that announcement come through. It pushed up, and this was, of course, a speculative buy. But once you see government money flowing, the markets are going to reprice their own valuations in it. They always do. And you'll notice that we suddenly pushed higher to 356 by the close. Very good session for actually two government-led stocks, one of them being Intel, which we've talked about in recent days. Another amazing day for Intel. And of course, Tesla pushing off that 320. So again, you say that technicals may not work, some of you guys. Well, they do, because they are defended by news announcements. They are defended by magical pieces of information that just suddenly come out. And they always seem to happen at the right time, if you guess that. Now, let's have a look at NVIDIA. Another strong session for that, coming up to the 135 kind of level. 140, obviously, the next target for the bulls in terms of a gap fill ahead of earnings. And I wouldn't be surprised at all if we can hit the 140. Obviously, if earnings pushes the 150 plus, the stock market is looking incredibly bullish and will push quite a lot of people out. So the 150 is the clear level for NVIDIA in terms of the toughest point. But this is, again, good signs. And it, again, shows you guys that during fear, if you hit great levels, most traded zone, huge dark pools, big options flows, all sorts of things that we had the other day, it does pay to sometimes buy the dip, at least in this current market, although that may change throughout this year. Let's have a look at the options flow. What's going on here? Options flow and bonds? Nothing. Okay, so that's boring. Let's have a look at yields. 30-year, 20-year, 10-year. They all dropped after the PPI result. I tend to believe it could be the tariff discussion. Who really cares? The reality is it dropped off the supply zones, the last kind of thing just holding it back. And that, of course, led into treasuries defending their key level. And I spoke about this in our private community. I said this is a spec play, but I wouldn't be surprised at all. And I think I even mentioned on the public show that yields would drop over the next 24 hours. And they did. So it seems like there's a lot of shenanigans going on here. There's actually a pretty strong buy off. I'll be looking for some big activity, but we do know that the largest activity coming through treasuries has been just about here, with some big transactions kind of clipping through. RSP, the equal weighted market, was also strong over the last 24 hours. Again, that's a good sign. We're just looking at different leads here. And the US dollar dropped pretty heavily. So this may be the tariff kind of discussions. I think it's something about EU 2.5% tariff. Who knows? The main point is the price action obviously moved down, and that can push into things like the 106 level. So this is what we're thinking. You know, the dollar weakening off, obviously that's helping China stocks. It's helping our gold trades. It's helping a few things here. And this is kind of exactly the time it all happened in the first Trump presidency as well. So yeah, we'll keep watching it. Now, do we still think gold has hit a temp peak? Well, of course, you guys know I've been looking for $3,000 for 2 years now, and it's been an exceptionally good trade. So congrats to people there. I still think we might be going into consolidation just before 3K. That doesn't mean I'm going to sell all my gold or anything. You know, I think it can go much higher. So it might do, you know, something like this. I'm not thinking it's, you know, the easiest money in this vertical cliff has already gone and been made. Now I would be guessing more of a consolidation, but we'll see. I mean, price action you can see here is basically a doji over these 2 days. Little bit of a push up thanks to the dollar weakness. If the dollar keeps weakening, hey, gold could continue on its way up. Let's move over to silver. Looks pretty good. Good last 24 hours. Not as strong as the other metals and stuff, but at least it did start to rally back through. 3270 remains the key level. Silver has some catching up to do. We'll look in our next video at silver gold ratio. You will be excited if you're a silver bull when you look at that. US oil, bit of a bounce, hammer. Does it mean anything? Probably not at this stage, but it's still a hammer. Some people will see that as bullish. I'll see that as, okay, let's just be neutral. Tesla, the timing. What an announcement. And that was absolutely right on that 320 zone, which of course is the perfect kind of gap fill in the early morning. And then it bounces through. Big session here of recovery. I think a lot of people are trying to go bullet to 376 based on the options, 380 level. Then we'll see what happens. But yeah, it's a little bit of rally here for now. Nvidia makes new high, very strong, 135. Can we be getting 142 gap fill? Seems likely. Earnings coming soon. We'll have a big announcement next week about earnings. We'll be doing a deep dive into Nvidia, as it's arguably one of the most important stocks, possibly the most important stock. And for now, it's been all green, all good. And that's kind of, I guess, what we've been talking about. Speaking of all green, all good, Intel, why? This thing just keeps going, yeah? Government contracts. Okay, well, anyway, that's the speculation. So this one here is, of course, ripping. You can see 26 is the kind of first target, 2580. Thing is doing pretty well. You've got to remember it is bottom basement dwelling, this stock. So what that means is it has been down and down and down for years and years and years. So could this be a massive double bottom? I tend to believe there's some Wyckoff properties here, and I don't think it's even deniable that someone's been accumulating. Look at the volumes, guys. This is not a joke. That is a huge amount of sustained volume at the bottom. Someone's a big seller and someone is a huge buyer. And I'm sure we'll find through some disclosures soon who those all were. Maybe it was one of you. HSI, let's take a look. Pretty good. Still nice. Obviously moving up. Bit of a sell there. Little scary kind of shooting star sell. Trend is still up though, so we need to remember that. That's just a candle, and it's a candle often designed to freak you out. I wouldn't mind to hit the daily 20. I mentioned this in our private community. The reason why is because that's where we've seen bounces before. And the daily 20 has been quite well respected here. A lot of guys have been asking in the chat and the comments down below, and I do read your comments, so thank you very much for those, about the discrepancies between the HSI and other Chinese markets. Just look at the fact sheets. Look at what they're actually tracking. Some will be tracking more real estate businesses. Some will be tracking more technology businesses. It's very important. When you're looking at an index, look at what it actually holds, and then you'll get an idea of the discrepancies behind each one. US 2K. Okay, could be a lot of opportunity here if the markets choose to just go risk on across the board. Still no 23, 25. So I would have thought this would have hit with the synergy of S&P going through 6,100 with the NASDAQ doing what's done. But that's the trigger level for big bulls to come in. And you can see here the NASDAQ has obviously triggered its bullish intentions. Big wicks at this stage looks like it wants to rip higher. The S&P will be probably the key there. And what about Ethereum and crypto? Slower last 24 hours, pulled back a little bit, still holding the right ranges to be bullish, but kind of needs to go. Maybe 1-2 sessions, maybe the weekend. That's pretty much all it's got. So Ethereum holding around that support area, and of course Bitcoin holding on to its support area as well. We really do need to see a rip though, probably next couple of maybe 2-3 sessions, because if we don't get a rip and it keeps doing this, then yeah, you could be going lower before you go up. I don't think that's the way that the current flows are looking, but it's important that we do see a rip on Bitcoin and Ethereum. So obviously we'll be watching very closely. Current small structure still just barely holding on bullish intentions. So yeah, we need to see that rip. What do you guys think in the chat down below? Core retail sales is coming. So of course that's the new news of Friday, core retail sales and retail sales in general. We'll see how the American consumer is looking. Obviously tracked by the market, it looks okay. And as always, guys, if you want to find out more about what we do, you can check out some of our courses, 7-day flash sale, and obviously follow us over on X. Get us to 30K. We're so close together, 29.8 or something like that. So if you haven't given us a follow, go over there and follow us. We do post a bunch of charts all the time, which is really awesome to share with you guys. And thank you very much for the interactions and also sharing some stuff that we put on these daily shows. So what's the general gist right now? It's got to be that we are basically in all green, all good for now. The markets have, of course, made their decision to climb the wall of worry. It looks like weekly closes will be important. And generally speaking, usually markets move from an equilibrium to another equilibrium. So it looks like the market might be trying to push 6,200. And really everything else we've been talking about so far has been kind of moving in the right direction. Thanks so much for watching. We'll see you in the next one. And remember, you've got to expect the unexpected when it comes to markets. They will make as many people seem as stupid as possible. And that's the way the market works. Bye for now.